Good evening, everyone. Today's session is one of the important topics of the latest amendments, in the TCS provision, which are introduced through the Finance Act 2020. So effectively, we'll be dealing with two sections, important sections, through which the TCS provisions has been expanded. Earlier itself, even before this, there were TCS provisions which were applicable on a specific set of transactions. Now they have increased the ambit or extended the ambit of the TCS provisions via these amendments. So we will try to look into these two sections. And there has been some guidelines which has been issued by CBDT, and also there's a press release. We also discuss about that. And in the research, whatever we have done, we have tried to identify the issues which are pertinent. And I'm very sure that there will be a lot more other issues which practically the participants would have come across. Okay, we will try to answer most of them, and you can also, if there is anything which is not covered, okay, which still there is ambiguity that is left over, you can mail to us as well. Okay, so the legends are fairly simple. There's nothing much to discuss in detail. We can just, as and when we go through that point, we can see that. And as I said, there is two important sections. One is the TCS on remittances under LRS and sale of overseas tour package, that is covered under section 206C1G. Okay, and the next one is TCS on sale of goods under section 206C1H. These are the two sections which we will be covering in today's session. So we all know that TCS is nothing but the another one more method of collecting taxes. I'm not going too much into the basics part. And as we are all aware, the TCS provisions are already applicable on various other transactions, such as on sale of tendu leaves, timber, liquor, okay, scrap, minerals, and other stuff. And same way on the sale of motor vehicles above 10 lakhs. That is already, these are the sections which are TCS provisions which are in existence already. So just a brief about the direct tax collection, how it has proceeded over the last 4 or 5 years. Okay. And most importantly, why the government has added two more sections is nothing but to increase their tax base. We'll also see in the next slide the objective of introducing the session as per the memorandum that has been presented as well. So you have just a brief look at the fiscal deficit, that is where the shortage of funds for the government. So their target for 1920 was 3.8, revised this one estimates. But even there were questions on this part as well, whether the figure is correct, and it is expected much more. And whereas for 2021, their target is it was 3.5% of the GDP. But this was presented along with the budget when the issue of the pandemic was not even foreseen. Okay, but now, as on date, the fiscal deficit target is expected to be reached somewhere to around 7.5 to 8%. Okay, so basically, the government is hard pressed for the sources, as well as trying to expand the tax base and wherever possible deepen deepen the tax base. So as I said just a moment ago, that if you see on the screen, the second point, that is where the objective as per the memorandum present along with the budget, the government has said that these TCS provisions are being introduced in order to widen the tax base and also deepen the tax base. Widen is but include more number of assessees, get a more number of assessees within the ambit of the Income Tax Act, and wherever there is existing, where there is an opportunity to collect additional tax from the existing assessees. These are the two objectives in introducing these two sections. So just a brief overview of these two sections is given the table here. So the first one, 206C1G, has two parts to it. So one is where the remittance for the purpose of remittance under LRS scheme is being made, other than for the purpose of overseas tour package. and where the remittance is being made for the purpose of overseas tour package. Those are the two subcategories in that section 206C1G. So predominantly, under section 206C1G, the TCS rates applicable is 5%. We will go in detail in the next few slides. And then under section 206 C1H, so it is applicable on sale of goods exceeding rupees 50 lakhs. So that's the rate prescribed is 0.1% with a reduction of till 31st March 2021 due to the pandemic. So now let us move on to the first section, that is 206C1G. So for the ease of understanding, what we've done is we have put the most important part of the fine print or the core section. We have not put the proviso on all the slides. Only the core section has been replicated here, so that will be easy for discussion. Okay. So the section starts off saying it is for every person. So that itself makes clear that there is no restriction on the applicability of this section. That is not only applicable for, say, the category of person, say only for companies or only for individuals or HFNs. Nothing like that. Any constitution, it is applicable to every person. But when you read the subsequent subsection, that's a clause, that is being an authorized dealer who receives an amount for remittances outside India from a buyer, being a person remitting such amount out of India under LRS. Okay. So this scheme, as I said, 206C1G has two parts. One is remittances which are being made under LRS, and second part is for purchase of overseas tour package. So in the first part, it is applicable to all the it says every person. That means any category of person is applicable. So in the first part, it talks about LRS scheme. So it is pertinent to note that LRS as such is applicable only to individuals. The LRS scheme is not applicable to any other category of person, say companies or firm or LLPs. It's not applicable. It's applicable only to a resident individual. Okay, so that is so it is applicable. So that means whoever the remitter being an individual, authorized dealers, it is going to be only banks. There is no other person is authorized dealers. So so whoever is remitting, whichever individual is being remitting funds outside India under LRS, okay, on all such transactions, TCS would be applicable going forward. That is the first part. Okay, and the second part talks about being a seller. So in the first case, the collector, the TCS collector would be the authorized dealer. In the second clause, that is being a seller of an overseas tour package. In the second case, the collector would be the seller, whoever might be his constitution might be, it is applicable to him. Here there is no monetary limits for the seller of overseas tour package. So whoever might be it. So if he is the seller of an overseas tour package, and if he receives any amount, okay, from a buyer being the person who purchases such package. So this second part of this section, that is second clause B of this section, is applicable for any transaction. Okay, with the buyer in this case, in the case of second clause B, could be again anyone. Here, as in the case of LRS, which is applicable only to individuals, in this case they have not restricted the applicability even in terms of the buyer. So in case of clause B, there is no restriction on who can be the seller and who can be the buyer. It is applicable to everyone, and there is no monetary limit in the case of sale of an overseas program, overseas tour package. Whereas in the first clause A, as I said, it is applicable to LRS, and LRS, since RBI allows LRS only for individuals. So in that case, the remitter has only to be an individual, and the tax collector will be the authorized dealer. Whereas in clause B, the remitter of funds could be anyone, any person, any category of person, and the collector as well. It just only that he has to be a seller of an overseas tour program package. That's all. So it is applicable in these cases. And then the rates, the basic rate that is specified in this section is 5%. And one very important point that is to be noted here is the language what has been used in the act. So if you see the clause B, we have highlighted certain important terminologies, what terms that have been used in the section. So one is being the seller of an overseas tour program package, and second being the any amount. So here they have not specified what should be the nature of amount, and they have simply said that any amount from a buyer, whatever might be the nature of the amount that is being collected from the buyer, if the TCS would be applicable on such. And only thing is the buyer should have opted for such a package that is being sold by the seller. And we will analyze it further as we go forward, and we'll also discuss the other issues that are there in the this section. So as I said, first the remittance under LRS is the 206C, that the first clause A is applicable to remittances under LRS. There is a monetary limit here. That is monetary limit of 7 lakhs per individual per financial year has been provided. So the very important point that needs to be noted here is this 7 lakhs of limit is applicable for remittances for other than overseas tour package. If the remittances towards overseas tour package, this limit of 7 lakhs is not applicable. Even if you pay 1 lakh for the purpose of overseas tour package, this LRS TCS provisions will be applicable. The authorized dealer will be collecting 5% on it. So it's for any other purpose other than the overseas tour package. Per annum limit of 7 lakh has been provided, and once the limit is exceeded, the authorized dealer shall start collecting the TCS only on the amount that has been exceeded. That is one point. And wherever PAN or Aadhaar is not furnished, it will be 10%. And this is practically not possible because under LRS, bank does not allow, with authorized dealers will not permit the individual to remit funds without PAN or Aadhaar. So most likely, I don't think that this will be applicable practically. Okay. And then one exception has been provided under LRS. What only in case if the remittance is towards educational purposes, okay, and then that too, that is being the if the remittance is towards education purposes and it is being made out of a loan that has been obtained, then in such case the TCS would be 0.5% instead of 5%. Okay, so only for the purpose of education, and that too if it has been, if the source of funds for that remittance is an education loan, then in such case the limit that the TCS rate would be at 0.5%. In all the other cases of LRS, it will be 5%. And once more, I'm repeating that this limit of 7 lakhs is applicable only for remittances other than for purchase of overseas tour package. And one important point, just to give you the background, why is it this has been made applicable only under LRS, not for any other remittance, that is under ODI or other this one. So for example, if you take ODI, okay, there are certain compliances that needs to be done by the remitter once the funds are being remitted abroad through ODI. That is, you have to, if you're investing abroad in a wholly owned subsidiary via ODI route, so in such case, you're supposed to file the annual performance report, fixed assets and liabilities report, and there are a lot of restrictions. And most importantly, you're supposed to repatriate the funds from abroad upon diluting the stake in the wholly owned subsidiary. Whereas under LRS, there is no such restrictions. You are allowed freely to remit, and there are not much of complaints. Only the disclosure which we make at the time of remittance, and then there is no mandate also to even to repatriate the funds from abroad if you dilute the stakes. Because of this, the ministry or the Ministry of Finance felt that there is a scope for non-disclosure of the income sources which are there abroad. That's why at the time of remittances itself, the TCS provisions has been introduced so that you can collect the amount. And one other important point is under LRS. So if you in ODI you have a specific restriction on round tripping of funds into India, whereas in LRS it is not even applicable. So because of these reasons, in order to collect information and track the remittance of funds, the government has decided to introduce this section. So where they'll be able to, at the time of remittance itself, they are able to collect 5% of the amount of remittance. And this just to give an overview that the remittances abroad under LRS has been consistently increasing year on year, and right now the limit is 2.5 lakh USDs per annum per individual. So it's every year the remittance abroad has been consistently been increasing. And if you can see this chart where for financial year 1920, the breakup of remittances abroad under LRS has been provided. And if you see predominantly the most important remittance abroad has been for travel purposes. And that is where the government also included a separate subclause and said that there is no limit for no monetary ceiling that has been provided for this one. So irrespective, even if you remit 1 rupee for overseas purchase of overseas travel package, this will be the TCS provisions would be applicable. And semi, this is the data regarding LRS remittances from 2008 to 2019. And now coming to the second part. So the first part, having covered the first part, the second part is for the which is applicable for sale of TCS provisions being applicable for sale of overseas tour package. As I said earlier, it's applicable to any person. Okay, and so any person receiving payment, okay, that is the seller, for remittances made for purchase of overseas tour program package is liable to collect tax as source at the rate of 5% with effect from 1/10/2020. I said that from 1st October, whatever might be the money that is being received after from that date, it 5% is applicable. And here the only condition is the seller should be, or the collector should be in the business of selling overseas tour packages. And no other conditions is specified. And more importantly, under this section, they have not even separately defined who is a seller or who is a buyer. Whereas if you see the next subsequent section, the next section, there is a limit for even, or there's a definition separately for seller. In this case, in this section, they have not said, they have not defined the seller separately. It is applicable to any person, any seller, no restrictions on, no monetary thresholds. Okay, and so in case of one other important point here is, in case of remittances towards the overseas tour package, purchase of overseas tour package, if it is being remitted or the funds being remitted abroad, either the seller or the AD banker, any one person would collect. So both of them will not. There is no need for both of them to collect. That clarity has been given. And then the most important part is, what is meant by overseas tour program package? That definition they have defined, saying that overseas tour program package would mean any tour package. Again, they said they're defining package, overseas tour program package, and then they're using the words any tour package which offers visit to a country, country or countries or territories outside India, and includes expenses for travel or hotel stay or boarding or lodging or any other expenditure of similar nature. So what we have said is the tour package. They have again said what is a package that has not been defined, that has been left to the interpretation. That is one. And but they said that any tour package which offers visit to a country or country outside India or a territory, that is nothing but special administrative regions like Hong Kong or other places, where if it offers to, if the package offers to visit to any other place outside India, in such cases that will be defined, that will be deemed as overseas tour package. And the expenditure, the charges could be towards travel, could be towards hotel stay, whatever, or any other expenditure of similar nature. That is what they have been defined. And so in what the term package, again, the how we interpret it, that is that will be critical part here. To the best of our understanding, the package is nothing but where the various services are bundled and you are being provided as one lot, and without assigning the values to each of these services separately. That means as a package, if you are given all the services put together, say travel, hotel, and other stuff put together, that is going to be a package. And if you are going to book separately tickets or separately hotel in different with different persons, then in such case this just shall not be applicable. And but one important point, I just go back to uh, the fine print, the extract from the fine print which we have replicated here. So if you see the clause B here, the most important point, uh, being a seller of an overseas tour program package. So once we are sure that okay, the seller is selling a overseas tour package, then in such case for him the TCS provisions will be applicable. Okay, as there no monetary ceilings, no other restrictions, and who receives any amount. So here they have not, or they have used the terms any amount from a buyer being the person who purchases such package. So they have not said that the amount that is being paid by the buyer should be towards the package. So if the seller is into the business of selling overseas tour package, and the buyer has purchased such package, and if, in addition to that, in addition to the payment for the such package, if he uh, avails any other services as well and pays money for that, in such case as well, TCS provisions will be applicable. So here only the two important. I'm just repeating it for a better understanding. So seller one should be in the business of any. The seller should be selling the overseas tour program package, and the buyer should have availed that package. And upon this, if the buyer is paying any amount, whether it is towards the package or any other service that is being availed by the buyer from the seller, in such case, this provision, TCS provision shall be applicable. So, and they are on the whole of the amount. So, for example, for the package, he is paying 1 lakh, and in addition to the package, he is availing some customized services. Another, and he is paying another 50,000 for it. The TCS shall be deducted on the 1.5 lakhs at the rate of 5%. This is how the section has been worded, because they are not who receives any amount from a buyer being the person who purchases such package. For the buyer to qualify, he should have purchased such package from the seller, and in addition to that, if he is paying any other amount for any other services, even on that this TCS shall be applicable. So now coming back, and they have given some instances in under which the section shall not be applicable. One, it shall not be applicable if, in case, if the buyer is liable to deduct TDS under any other section. So this is a general what we can introduce. This is a general section, and if the specifically if the buyer is supposed to deduct TDS under any other section, okay, then if the buyer is supposed to deduct TDS under any other section, then this TCS shall not be applicable. The TDS provisions will override this TCS provisions, and then it is not applicable if the buyer is a central government, state government, or embassy, or any high commission, etc. So here, one thing that kept in mind is they have exempted only the state government and central government, not any of their agencies or their corporations owned by the government. It is applicable on this exemption is applicable only to central government and state government and high commissions and the local authority, but not to the corporations or other or government-owned corporations. So still it will be applicable for the government-owned corporations. And if the government notifies any other person in the future, for such persons, this provision shall not be applicable. And now some of the important issues or points for consideration. As I said here, the seller and buyer have not been separately defined. They are saying that any seller, so in such cases, so it is applicable for all. There is no monetary threshold that has been prescribed here. Okay. And then the threshold of 7 lakhs is applicable only for LRS remittances other than for tour packages. So in case of tour packages, there is no limit. Okay, there is no, even if it is 1 rupee, TCS is applicable. And then whether TCS used to be collected on GST portion, this part we will discuss when you are dealing with the next section, because the issues are the I'll explain it in both together. Okay, and so in this case, in the case of TCS under section 206C1G, so it is collected at either the time of debit of the account of the buyer or the receipt, whichever is real. If you're collecting advance, it should be collected along the advance. Or if you're just first raising the debiting the account of the buyer, then TCS is to be collected and paid. Okay. And now moving on to the next important section. This TCS on sale of goods. Okay. So again, we have replicated, or we have replicated some part of the important part of the section here. As like this section as well starts off with every person being the seller. So there is no restriction on the constitution of the business. There is individual, HUF, company, or anything. It is applicable to all classes of person. Okay, every person being a seller who receives any amount as consideration. So if you see the language here, in the sections 206C, 1H and 1G. 1G uses the word any amount, whereas 1H uses the word specifically consideration. Okay, any amount as consideration for sale of any goods. Again, this goods is one word is meant by goods that we'll see, of the value or aggregate of such value exceeding 50 lakh rupees in a previous year, other than the goods being exported out of India or goods covered in section 1 or 1F or 1G, shall at the time of receipt of such amount collect from the buyer an amount equal to 0.1% of the sale consideration exceeding that 50 lakh rupees. So here the other important point is, as I said, we at the start of the session we have seen the session. There are already some sections which are existing for various other products, like for TCS on sale of tendu leaves, TCS on sale of liquor, alcohol. So this section will be applicable only in cases of goods which are not covered under those specific sections. Since the tendu leaves and alcohol, the sections for those are covered under specific sections, for those sale of those products, this section 206C1H shall not be applicable. And as a, the this section is applicable when when a particular buyer in a year purchases 50 lakh, more than 50 lakh rupees from the seller. Okay, and this could be one single transaction or one single product or multiple series of transactions. Okay, so that's why the words of the value or aggregate of that value, that means multiple transactions aggregating to 50 lakhs or a single transaction of more than 50 lakhs. In such case, this section shall be applicable. So under this section, TCS shall be applicable at the rate of 0.1%, and but till 31st March 21, it will be applicable at the rate of 0.075% because of the waiver given by the government till 31st March 2021 because of the COVID scenario. By every seller whose turnover exceeds 10 crores during the last financial year. As I said, in this section, they have defined seller saying that any person who's selling the goods whose turnover in the previous year, that is, for example, now this for the relevant financial year 2021, we need to check the seller's turnover for 1920. If his turnover exceeds 10 crores, in such case, he will be seller for whom this provisions are applicable. And then in such TCS would be on receipt of consideration from a buyer for sale of goods exceeding value or aggregate value of 50 lakhs in a previous year. As that in this section, the important distinction between the previous section and this one is here this TCS is applicable only on receipt of the money, whereas in the previous section we decided it is on the receipt or on the debit of the account of the buyer, whichever is earlier. Whereas here it is very clearly stated that this section is applicable only on receipt of the consideration. And in this case as well, they have said that in case where there is no PAN, okay, or Aadhaar, so in such case, TCS rate shall become 1% instead of 0.1%. Okay, and in the press release issued by CBDT, it has been stated that there are only 3.5 lakh persons who have disclosed business turnover of more than 10 crores in FY 18-19. So only number of the eligible TCS collectors shall be only 3.5 lakh people across the country. Okay, and maybe for 1920 there will be slightly more this one. And there are only 18 lakh entities which already deal with TDS or TCS. So these are the data statistics that have been given by the CBDT while issuing the press note. And this one now we'll also see the sections or the instances where section 206C1H shall not be applicable. One is this section is not applicable to export of goods outside India or import of goods outside India. So only this is applicable for only for domestic transactions. Okay, and as I said earlier, the goods which are being covered with the under the existing provisions for such transactions, the section shall not be applicable. So in the case of alcohol, liquor, or tendu leaves, timber, etc., forest products, scrap, etc., this section is not applicable. And then the sale consideration received for fuel supplied to non-resident airlines, this transaction shall not be applicable. Okay. Seller and as since the seller of an overseas tour package is separately covered under 206C1G, this section again is not applicable. And then, as in the previous section, if the sale of goods is made to central government, state government, local authority, or an embassy, this section is not applicable. And as I said, one more, I'm repeating it once more, that this is not applicable only if the sales are made to central government or the state government or the local authority. If it is sales are being made to any other agency or the corporation owned by central government or state government, this section shall be applicable. Okay, and if the buyer under this section is required to deduct TDS on the goods purchased by him from the seller, TCS shall not be applicable. As I said, if the buyer is supposed to deduct TDS under any of the TDS sections, then in such case, this section shall not, seller need not collect the TCS. And now the most important point, since this section is applicable only on sale of goods or not on services. So in such case, what is the definition of goods? This section does not define goods, or the act does not define goods. So then we need to go to the other acts which deal with the definition of goods. So here we have presented you the definition of goods as per Sale of Goods Act and under the GST. The only major difference and the one important difference is under Sale of Goods Act, even shares and securities treated as goods, whereas under GST it is not such. Only there is a difference. Otherwise, almost it's the same input has been retained in GST. But so in this case, which one shall be applicable? That we'll see in the next slides. So what in one other important point is, which I've highlighted in the next subsequent slide as well, that under 206C, there is one more, the other sub clauses, one sort of subsections 1I and 1J. So 1I states that the central government can issue guidelines for better implementation or for providing clarifications for the TCS provisions. And then it says in 1J, it states that and any guidelines issued under 1I and which has been laid in front of the both houses of the parliament shall be binding both on the assessee as well as on the department. So in this case, there is one very important point is they've issued a circular in the month of September last week, somewhere in 29th or 28th, the date. Okay, but the CBD has issued a circular, but it has stated it is a guidelines for application of this uh, provisions of TCS. Okay, so it is not clear whether it has been laid in front of the it was laid in both the houses of the parliament, and whether it is this guideline shall be treated as uh, be binding on both the assessee and the department. That part is not yet clear. Okay, we have also replicated that fine print of that section as well in the subsequent slides. But through these guidelines, the CBDT has given some clarification, but as always, it has complicated these sections further. Okay, and so some of the we'll just go to the clarifications and guidance which has been issued and prescribed in this circular. Okay, so yeah. So in this section, since actually this section was proposed to be introduced on 1st April itself, but later on the request, the government postponed it to 1st October. Since it's starting from the mid of the year, there has always been this confusion whether this 50 lakh, we have to start counting it from the 1st October to 31st March, or it should start counting from 1st April to 31st March. So in the guidance has been made clear that though the section is applicable, TCS provisions are applicable from 1st October for the purpose of computing the limit, either 7 lakhs in the first section or 50 lakhs in this section, the entire year needs to be considered. So if before that is before 1st October, if 50 lakhs of sales has already been, 50 lakhs of sale consideration already been received, then beyond 1st October, whatever amount is received, immediately this section would be applicable. So this is nothing but, in other words, the 50 lakhs limit is to be seen throughout the year. That is from 1st April 2020 to 31st March 2021. That is what is being clarified in the guideline. And one other important point, we in the previous section, while discussing about the issues, we have discussed that whether GST is to be collected on the whether TCS is to be collected on the GST portion as well. So in this guideline, while issuing this guideline, they have CBD has stated that no adjustment shall be made in terms for the any of the indirect taxes, including GST. Along with that, it also stated that no adjustment shall be made for any sales return or discount, etc., etc. So whatever is the value, okay, and then since it is going to be collected at the time of receipt of consideration, you are supposed to collect even on the GST. But there are some issues in this part. We'll discuss that going forward. And then one other important point which has been clarified using this guideline is that in the case of motor vehicles, okay, whether on sale of single motor vehicle, that is a single vehicle of more than 10 lakhs, whether 1H will be applicable or the original section of 1F. As we discussed already, the section itself makes it very clear. The section 1H shall not be applicable to subsection 1, 1C and 1F, which deals with the various products for which TCS provisions are already applicable. So under 1F, TCS is applicable on sale of any motor vehicle of value more than 10 lakhs. In such cases, any dealer now who is selling vehicles to its customer, if the value of the car is more than 10 lakhs, the TCS has to be deducted under section, continue to be deducted under section, or collected under section 1F at 1%. Whereas if any buyer is buying a vehicle which is less than 10 lakhs value, and in his name itself he is purchasing 3 or 4 vehicles exceeding value 50 lakhs, number of vehicles, say it's 5 or 6 vehicles. In such case, TCS shall be deducted under 1H. So if the value is more than 10 lakhs, each vehicle value is more than 10 lakhs, the TCS deduction should continue to be under 1F. If the each vehicle value is less than 10 lakhs, and if the value of purchase during the year exceeds 50 lakhs, then in such case, the dealer shall deduct at 1%. And in the previous couple of slides, we saw that what is the definition of goods, okay, which as per the Sale of Goods Act, the goods includes shares and securities, whereas as per GST, it does not include securities. But when you look at the guidelines issued by the CBDT, then they have specifically stated that under the guidelines, it has been stated that this section shall not be applicable for any transaction involving securities carried out through the recognized stock exchange. And in other words, means they are also including the shares and securities as part of the goods. So in such cases, any transaction which is outside the stock exchanges, that is taking place outside the stock exchanges, and including unlisted securities and private placement of securities, in such cases, this TCS provision shall be applicable. So only thing what you need to see is if the seller, if his previous year turnover is more than 10 crores, and irrespective of the buyer's category, and if the value of sale of unlisted securities is more than 50 lakhs, then in such case it shall be, this provision shall be applicable. Okay, and the other is transaction in electricity, renewable energy certificates and energy saving certificates traded through power exchanges. This transaction is not, this TCS provision is not applicable. Okay. And then they also released the press release, as I said, was issued in terms of giving clarifications on the value of, on how to compute this 50 lakhs. As I said, the whole year, okay, the turnover of the whole year needs to be considered, and most importantly here it is on the receipt basis. So if you receive more than 50 lakhs even on advance basis, then we need to start collecting TCS. So here once again I'm reiterating that this limit of 50 lakhs or 7 lakhs in the previous section is applicable for throughout the year. So at any time if it exceeds 50 lakhs, this immediately needs to be, from 1st October needs to be collecting. You should start collecting the TCS. So for example, if before 1st October itself, if you have received already, if the seller has already received 75 lakhs, then in such case you need not worry. You can start collecting TCS only on the amount that is being received post 1st October. So you need not go back and collect on the excess 25 lakhs which has been received. And one other point is this, as in this case, in this section as well, the TCS is to be collected on the portion over and above the 50 lakhs. It need not be, it's not from 0 to 50. It is only on the additional amount that has been received over and above 50 lakhs. Okay. So whatever is being received after 1st October, on that portion, you need to collect TCS, but the limit of 50 lakhs is to be computed for the whole year. There's just a flow chart of how this section operates. Just now the most important points, that is issues and points for consideration for this section. As I said, as we discussed earlier, the definition of goods. We have seen the definition as per the Sale of Goods Act as well as per the GST Act. So here, in the, as I said earlier, in the guidelines, they have said that transactions in securities and commodities which are traded through the recognized stock exchanges or cleared by recognized clearing corporations, including the recognized stock exchanges or clearing corporations located in international IFSC. Only for this case, in these cases only, this section shall not be applicable. In any other case, it shall be applicable. That is, and then that implies that under the definition of goods, even the shares and securities are also included. And in case of unlisted shares, sale of unlisted shares, TCS shall be applicable. That is what we have clarified. And whether in computing the 10 crores of turnover of the seller for the previous financial year. How shall we compute? Whether only the sale of goods is to be considered, or all the revenue from all the streams is to be considered. In this case, it has been clarified that you need to, because if they have used the word turnover includes both sale of goods as well as sale of services or any other sorts of income, other streams of revenue. So in such cases, both sale of goods as well as sale of services needs to be considered in computing the 10 crores. So for example, in the previous year, you have sale of this money turnover from service rendered is 8 crores, and from sale of goods it's only 3 crores. Even then, in the current year, TCS provision should be applicable to this buyer. Okay, so it is all the whatever that could be included in the turnover needs to be computed. Okay, and yeah, whether TCS is to be collected on the GST portion. We have briefly discussed that in the guidelines, it has been very clearly stated that there is no adjustment shall be made towards GST, discounts, sales returns, etc. But but the important point is, and it is yeah, but the important point is whether this guideline is binding on the uh, whether uh, the guideline is binding on both the assessee and the department. So department is anyhow, because it is issued as a circular, it is binding on the department. However, we are not, as I stated earlier, subsection I, this 1J states that whichever guideline has been laid in front of the both the houses of the parliament, such guideline shall be binding both on the assessee and the revenue. Okay, so in such cases, there will be uh, sorry, only in such cases it will be applicable both on the revenue and the assessee. So in this case, it is not clear whether the guideline has been laid in front of the both the house of the parliament. That is one point. That's whether it is binding on the assessee. That point is not clear, but that is one. And second, other important issue is the terms that has got the wording that has been used in this section 206C1H. I'll just go back to the first slide where we have given the fine print here. So in this case, if you see, there is any amount of consideration or any amount as consideration for sale of goods has been used. But here GST is not a consideration that is being paid for sale of goods. It's not a consideration. It is a tax that is being collected by the seller. There is a contradiction in this part here. Whereas in 206C1G, if you see the wordings there, the terms used there is any amount. They have not used the words consideration in 216C1G, but in 1H they have used the word any consideration. GST is not a consideration, but there's a contradiction in the guidelines issue, which we are expecting that will be clarified in due course. And one other important point is we already have a circular issued by DCBDT in terms of TDS, where it has been clarified that there is no need to collect TDS on the GST portion. But since TDS and TCS being under different chapters, that circulars may not be applicable here. And we also have judicial precedents where various high courts have held that we cannot collect tax on tax. And there is a question here: is buyback of undistributed shares attracts the TCS provision? See here, this is applicable only on sale transactions. Buyback shall not be construed to be a sale of shares, and hence it will not be applicable for buyback. Because in sale, there has to be a good that has been transferred from one person to the another. But once the company buys back, the shares gets extinguished. So there should not be any transfer of goods there. So it shall not be applicable. So now the next question is whether TCS used to be included in collecting the GST, whether this is the other way around, whether that issue will arise here. But here for this we have the clarification even from the CBEC here, saying that because generally GST used to be collected on all in the valuation for purpose of GST, you need to include all the levies and all. But they have clarified that TCS is not TCS need not be included while computing the value of the goods for charging GST. Okay, and the other point is this section is the portion of this section is applicable to all buyers other than the importers and exporters. Okay, and then whether the consideration shall be FOB or CIF, that depends on which it will be collected, and that depends upon the way you raise the invoice. If the contract is on FOB basis, it will be only on FOB, and if it is on CIF basis, TCS will be on the CIF value. As we stated earlier, GST will be included for calculating the that is included in TCS contradicts the CBD's position on TDS. Okay. And this point, the next point has also been already discussed. Whether the guideline is binding or not is not clear. Okay, the guideline issued on 17 through wide circular number 17/2020. If you see that circular, it is a circular, but they have used a subject as the guidelines for implementation of section 206C1 H. Okay, so it's not clear whether it is binding on the associate. And as I stated earlier, the interplay between 206C, 1F and 1H. So wherever 1F is applicable, that is where the value of the motor vehicle is more than 10 lakhs, single vehicle being purchased is more than 10 lakhs, it will be applicable under 1F, and 1H is applicable only in other cases. This is the existing compliance. I'm not dwelling too much into it. That's the same, all the consequences, whatever was there earlier, is applicable even for this non-compliant and others sections. This is it. This is the, and I'm sure that there will be a lot more doubts, practical issues that will come up in the days once you start implementing this TCS provisions. You can feel free to contact us anytime. You can drop in a mail to us at research@tvc.com or comment on our YouTube channel. We'll try to reply those doubts as and when we get time. If there are any doubts, I'll just be more than happy to answer. Thank you so much. That's it. So you feel free to contact us. Thank you.